In this week's Three Top Picks, Peter Wilmshurst from Franklin Templeton is talking about three companies that are very well known within their respective fields, but some investors might be surprised to learn that they actually still represent some value opportunities.
So financials is an area that we've been overweight really for the last 5 years, and there's been an evolution of the stocks that we hold within the financials and even the markets we're invested in and the like. So European banks, even within the broader financials context, would be the area that we think's most attractive. It doesn't mean it ends up being 30% of our portfolios, but it is an area where you can still buy a number of banks which have fixed their capital position, fixed their liquidity position, starting to get back to loan growth, bringing costs down, generating pretty attractive returns, and starting to pay more of it out to us as investors. So BNP would be a good example of it's not going to set anyone's hearts racing. It's not going to be generating 20% plus return on tangibles anytime soon, but it's a bank where you can buy, even with the problems having largely gone away, them having fixed the business, you can buy it on 7 or 8 times earnings, 50% payout ratio giving you a 5% plus dividend yield, and the equity they're retaining, they're growing their business pretty intelligently. So the energy sector is an area that we've been overweight before the oil price bottomed, through the bottoming of the oil price, and through this recovery. And there's clearly been some changes in the stocks that we've held through that period. The market got very depressed in early 2016 when the oil price was in the 20s. It's got more excited somewhat with the oil price back up in the 60s and 70s, but there's been a disconnect really between some of the stocks and how well they've performed in the oil price. So we wouldn't be sitting here arguing today that the oil price is going to go up a lot from here. It's trading at about what is, we think, a long-term sustainable level. Shell is a company that if the oil price stays somewhere in the 60s and they deliver on their cost cutting and their capex cutting as they have been doing, they'll give you roughly a 10% free cash flow yield at current valuations. You'll get 5-6% of that back as dividend yield. And with the reductions they've been able to make in capex, they'll start to grow their volumes again in due course. They've got the balance sheet in order. So it's one that you don't have to argue the oil price goes up anymore. You've just got to argue that the free cash flow they're delivering at current oil prices still gives you a pretty compelling valuation story in our view. So Shell's one we've held for a while. It's done okay, but we still think looks pretty attractive value. So technology, when people talk about the markets being hot, they usually go to the FANGs or Alibaba, Tencent, and in the like in China. And while we've held technology stocks over the years, and there's some we've held for a while, it's certainly tougher to find value in technology today, but we still think there is some opportunity. And Oracle is a name that we've also held for a few years. It's going through a transition at the moment, as most of the software players are, as corporations and even individuals to some degree transition from having their software deployed on the hardware that you have in your office, in your home, to a cloud-based infrastructure. And Oracle still runs the mission-critical databases for the vast bulk of the big companies out there. Those companies are certainly starting to transition to the cloud, and they'll continue to do that over time. Oracle will probably win some of that work as a cloud vendor, but critically we think their databases are just well ensconced. They are the ones running mission-critical for banks, retailers, all the really big users.
Any advice in this video is general advice prepared by Morningstar without reference to your financial objectives, situation, or needs. You should consider the advice in light of these matters and any relevant product disclosure statement before making any decision to invest.